Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How was your week?
Oh, really good. Just kept it small. Couple of those days. Hit big on a few things. Just MDB continued to move, and then I've kind of been watching the John Deere all week and hit really large on that. It went up 5% on earnings, and I just didn't think it was going to hold that. And then it just kind of went, way way below what I expected. Finished the day red, so that was some nice momentum on that one. But yeah, I mean, overall, we kind of saw the writing on the wall with the move up on debt ceiling optimism. That could work the other way this week. We'll see. But yeah, I think we had a good plan.
Yeah, I don't think could have walked through the days last week of how it was going to pan out much better um, with the front load starting for the debt ceiling euphoria. Um, I, I've been wanting to say this all week, pretty much, but like you can nail what's gonna happen. That doesn't mean you nail your trading. Because I knew how the week was gonna pan out, and um, I didn't have the best week trading. Um, did okay, throughout the week, but getting to gold just wasn't there. Volume's just not really there on the share side, but that the news plays are always have been good. So AI was good, early in the week. Kind of took a whole week to make the move. So I didn't get all of that. And laser and invis, I don't know why lidar's up right now, but there's something brewing in there, I think. And then just some of the ones we've been on that just take time. Bosch and Lom finally got to those strike targets you talked about. Open's been a nice little scalp play for me. Um, but yeah, just kind of staying in the regular stuff. Didn't get much of Groupon. CLSK still been a gem. Um, but
Yeah, I
but
think for
there's not a
me,
lot not a lot of range or meat on the bones. I think the one I called out early in the week, the IMPP, it ran 100%, but I was out of that, 25 cents into it. And
yeah,
that's just how it's working over here right now. So
I think for me, one big lesson is to just stay on some of these winners like LLY. Just just keeps going, and I saw the longer term flow on this thing is actually 500 plus, and that seems crazy, but it's kind of playing out that way where it checks back down a little, but just kind of keeps going up. So staying on stuff like that. Your comment on volume, definitely saw that with so like MSTR. I was in a trade there, is doing okay, but I look at the volume was like 100,000. I'm like, is that a misprint? What the hell's? It's like they just forget it exists. And so I went ahead and get out of it because I don't want to be in something where there's no activity happening. I mean, especially if you're in options, because time just eats everything up. So you just get out and reassess and wait for volume to come back.
you say time too, and I think that I found a way for that to translate the share side because when you're playing, I have a specific set of filters and scanners that I pretty much follow religiously. Everyone in the room has them, um, so we all see the same stocks, right? Like we see the same four or five, really good things that do have volume, but without that, if I'm just looking at something that doesn't have volume, I am wasting my time just like an
Yeah,
option trader would. And I need to be, where the fish are, where the volume, where the action is, um, which is again why I use those screeners to find plays or find plays that I'm familiar with that do have volume. But it's been really thin. So seeing, when you have, let's say my scanner normally on a regular, normal market conditions pops up like 15 tickers at the open. When you see like
yeah,
three tickers, on there, you're like, okay, here's where I can trade. Currently, we're
yeah,
popping up like six, and you're lucky if you have one that you're familiar with, because you get a lot of those buy-in
Yeah.
names and just weird crap that gets news that has, normally has, let's say, a 500,000 volume on the day, and it's already had 2 million in the pre-market. So it definitely hits my volume side scanners. But those
Yeah, and
aren't what I'm trying to trade.
the follow through is has been tricky. Like so I did catch the bottom on M, gave it all back and then some, 2 days later. So it's just not the time to start a swing. I mean, especially in those retail stocks are really kind of shaky right now. So despite this big QQQ melt up past August highs and SPY doing pretty well, yeah, there's some weakness around. So you have to be careful, and it's where the extra homework really is important.
Well, not to get into spy too early here, but I mean, it hit 420 finally. I mean, we're finally there.
Yeah,
We got that. We got that test. Um, so I mean, we're definitely. I don't want to say overextended, but we're at the top end of that range we've talked about for almost a year now. Um, so in general, your your better bet would be to the downside right now. Like there would be more range. That's where the better ratio is. Breaking out to an all-time high here would be, um, on any chart would be, it would need a reason, and I don't think that debt ceiling's enough to do that for many things. And if it is, it's going to be real short term.
yeah, I think things need to cool off. It's not, and even if it does, it's not much of a victory for the perma bears because they've been bearish for months. But yeah, I think you just have to be really careful about the upside, and it really is a lot of the stuff that's been lagging that I think
Yeah.
can catch up. So that's what I'm
Yeah, no,
after
when
too.
we've talked about that our entire existence. That you probably will miss the front runner most times, but there's always stuff that's going to catch up, get up on its own slowly but surely. Um, and I don't know if you watch Read the Room, but we're seeing that now with all the B plays. The less sexy B plays, names but names that you don't really think of as investments.
Yeah,
A,
and I have a few that they took. I mean, it's kind of the net pattern where they took some real punishment on earnings, and then even had a kind of secondary leg down, and now they're just recovering even to half of that drop, and it's a big move. So there's going to
yes.
be a few like that, and then with some of these earnings coming up, you look at something like Snow has just been on a crazy run off our level, and it's headed right into earnings. So it can absorb a 20% drop and still be way the hell above where we talked about it. So, it's that is that to me is positive because stocks are still going to have downside. They're still going to have big pullbacks, but we're not talking fresh lows. Nothing catastrophic. They do recover from these drops, and that's where the opportunities are for us.
Yeah, I think that's one spot we do disagree right now. I think with the proper setup in DD, you can swing right now. And just to spitball it, not to create a debate or anything, but Disney's probably a good example of that. Um,
Oh well, my comment specifically is about retailers,
oh,
like
sure, sure.
so the Macy's
Oh, okay,
and
okay. It's just
Foot
yeah,
Locker,
yeah.
and like so I'm just going to be real careful swinging anything there. But I actually think I'm swinging oil right now. I think silver is likely going to give an opportunity for that coming up. So it just depends, and even in some tech, I mean, like Twillo, I wouldn't really hesitate to do some Twillo leaps right now. I think it's in a pretty good spot. So yeah, no, I think it just depends on the sector.
Yeah, man, and your stuff, that's that buy red comes back in. I mean, like,
Yeah,
and it's a skill. I know it's a skill. It's like hitting a curveball, but you learn to like properly buy red. I know we talk about it off and on. Probably should talk about it more, but if you really understand, the overall perception of what fair value of a stock is, um, it's real easy. It helps to buy the red, and then you get Snow. you get things like snow that do go to 180, and you're like, oh, our Facebook that does go to 240, and
Yeah.
it you just have that overall picture, and you use time to your advantage. Um, but buying red is like the number one tool of swing trading, in my opinion. Um, you have to
Yeah.
have
And
you have to
on the
have it.
option side, the option side with swing trading, you just got to get out of calendar and, like June contracts. That's not a good thing to swing. It's too close. So, and June was fine, 6 weeks ago, but that was 6 weeks ago. So I think, for options, it's kind of like how, for months, January was what you look at. Okay, January is a leap. Well, if you thought that 6 months ago, we're 6 months in. Maybe you want to look a little further to March now, and so you have to recalibrate where you are in the year, and not just stay locked into these specific dates just because you've been trading them for weeks.
Yeah, I don't know how it works on the option side, but I mean, obviously planning is going to be important. But um, another reason I mentioned swing trading and wanting to bring that up is you can't really plant your flag in a swing trade, right? Like you don't just
Yeah,
you got to
yeah,
kind of DCA in. I think that helps your trading in general because a lot of people with their just straight momentum traders, they're planting their flag, they're in and they're out, they're one price in and one price out. Um, but yeah, you got to move your dates. That's kind of weird. I never thought about that as a swing trader on the option side. That if you start 2 months out and you're 3 weeks into your swing trade, now you're only a month out on your expirations. Um,
yeah. And I'm not. I don't like to constantly roll those. So that's why, like, I just buy it once. I mean, that's why, like, someone asked me. I mean, this was a day trade, but someone asked me about DE on Friday. Like, did you re-enter? And I was like, no, I bought five of them and sold four, and then just held the other one through the secondary move. I don't want to constantly jump in and out of stuff. I just want to buy it, and then that's it. If I'm planning multiple buys, that's a little bit different. But the whole point of a swing is it's kind of lower maintenance. I bought Snow 180C August 6 weeks ago, and just held on to it. Did not catch all of this, but caught a lot of that move. So that's always kind of my thing. Like, the fewer trades, the better. That's generally how I like to look at it.
Interesting, interesting. Yeah, I'm like a treat it like a bill type of guy on swing trades.
Yeah,
But they stay small. It helps you with sizing, and I mean it just helps with all this. I don't know. I guess I'm biased in that regard since that's where I started with swing trading. But it helps you with all the little things that a lot of traders are missing. I think, but a lot of traders that are trading now have started in a option small account momentum environment. So I guess it's understandable. I'm just a grumpy old man at sometimes, I guess.
yeah.
Um,
I think the most common kind of trading right now, you look at Twitter, it's all this zero DTE stuff, and like the ones who say that they're doing risk management are buying like 1 day expiration instead of zero. So
yeah,
it's I there's money to be made, but I just don't think you can. I don't think most people can really grow their account when it's just boom and bust every single day. You got to have a foundation.
yeah, and I mean just get. I don't know. You got to learn to take the percent.
Yeah,
In my opinion, it's gonna help you in the long run. A lot of people don't want to hear it, but
yeah,
buy 4 or 5 things and go back to work and just keep buying those 4 or 5 things, and 3 or 4 years
yeah.
you'll be fine. Um, let's talk. Let's go to spy. A little spy action here. 418.
All right.
Got the
Yep.
418. Nailed that. The sucker.
Yeah, that was good. What was my high number? Was it 16?
14.
14? Oh wow.
Yeah,
Yeah,
and
that was
then
way off.
when you were 4 to the bottom, I was 6 to the bottom. I think we only got to 10,
Yeah, yeah.
which that was surprising. Um, not as much
Yeah,
as
that's pretty remarkable. I usually don't trade SPY very much, but I actually did the other day because basically QQQ made this big leg up, and SPY was just kind of sitting there, and I was like, well, this isn't gonna really last. So I went ahead and grabbed some and did well on that. The my take going in is that QQQ is going to slow down a bit, stay flat, pull back, and that SPY might actually catch up some. So my numbers. Do you want me to go first?
Um, I won, so I should probably
Oh,
go
you go ahead.
first.
Yeah,
Yeah, so
yeah,
that
go
would
ahead.
be
Yeah,
all fair. So, um, even though I'm gonna throw exactly what you just said out the window because we look at it differently. Um, I'm about
yeah.
the debt ceiling getting resolved, and not if it does or if it doesn't, but just on the timing of it. I think if it's not resolved by Monday, we're gonna get a little bit of the same action that we got last week, where it's not gonna like that. Um, but I think our downside is your old number now to that 414, um, and I'm gonna go 22 to the top. 422 to the top. I want to go 424, but I just don't think, um, unless it happens today, they get it resolved. So we're going to go into a doom and gloom start to the week with the debt ceiling.
All right, very good. So I got us a little bit higher. Um, 425 is going to be my
Ooh.
upside, but and my downside is 412. So I got a big range this week, and this is based on option strikes and just a narrative I see sort of fitting those. Where I think we kind of dip and rip is my take on it.
Yeah, so you have a $5 bigger spread than me, so that's another way to look at it this week. You have a
Yeah.
$5 larger range. You think we're gonna dip first and then rip? So we're gonna pull back
Yeah. I
six
think I
bucks.
think we might gap down to start things off, and then I think people are going to chase puts and get wrecked on that.
425. That's a big number. Are you seeing that in flow, or are you just pulling
I'm
that one
seeing it in
out?
flow, but I'm seeing it in flow for not this week, but the week after. I just think we might get a little bit of head start on it.
Okay, makes sense. Makes sense. I mean, I think they get it. Do you think they're getting this resolved? I think they're getting this resolved. Um,
I do. I don't think there's a lot of benefit for Republicans to not do it, and I think that they could still make Democrats look bad and get it done. But yeah, I just don't think like the whole we're not in one of those Tea Party shut it down kind of moments where they'd see that as a good thing. So I don't think they'll do it. A lot of posturing, but the posturing can impact things. So that's where I think futures might start off pretty ugly today. That would be my impression going into it.
nice, nice. Yeah, I think they're dragging their hands, and Biden's stubborn, so it's going to be last minute, which the market's not going to like headed into the week. Um,
Yeah.
but as soon as there's a resolve, you're going to get day and a half of mooning. I don't know
What
how the kids say it.
so what's your take on so that FOMC minutes or this week, which
Yeah,
isn't much of
yeah.
anything. But what's the like PMI?
What this
Do you
week?
think? I think so.
It's the which one is it? It's the personal. It's your personal expenditures, whatever that one is. It's like how much we spend on actual goods and services this week. Something
Where
like
that
that.
interests me is that it seems like these data releases are having less and less of a sustained
Yes.
impact. Like they're just sort of good for a few candles pre-market, and then the market already kind of just goes where it's going to go based on that. So that's actually the main thing I'm looking for, rather than a big move. I just you see a trend, and you want to see, is this trend going to continue? And so far, the trend has been the market is accepting whatever data comes out there and not changing course based on that.
Me and Professor see things the same way, but from a different view. Market is done with these people's shit.
Yeah.
It's priced in. The market is forward thinking. Um, Everything's priced in. Some people are already off sides. Shout out to Nvidia, 70% forward earnings this year, or 70 times forward earnings from this year, which is all the talk right now on the talking head shows if you watch those. So I mean, some people are off sides to the. I mean, look where Apple's at. We're off sides a little bit. We're getting a head start that they're done. They're ready to go. It's like your parents telling you you're ready to leave to the water park for an hour and a half. You're standing by the door. You're ready to go. You got your floaty going. You're
Yeah.
just ready. You're ready, and that's where the market is at. It is priced in all this crap over the last, um, let's say, 2 years, with Ukraine and with the inflation and with transitionary and with now the debt ceiling. It just is done with it. We had a little bit of euphoria spots along the way. That Democrats were going to figure it out. That was a good time. Um, but it's just, yeah. I just think you're going to need something pretty major to shock this market. Um, yeah, that's all I got for that rant. But
Yeah. No. Yeah.
it's
Okay.
PCE. It's personal consumption expenditures, but it's what we spend like on rent and car payments and food and
Ah, gotcha.
which
Yeah.
is something I wanted to ask you about because I kind of noticed it when I go through my 400 flipping stocks, which is now like 420 because you keep adding to it every week.
Yeah.
Just playing. Um, food stocks in general, like no matter which side of it, outside sugar water that don't count, but actual food stocks, all kind of taking a beating right now. Just wondering.
Yeah. They are, and I got a little bit ahead of that with because they were way overvalued. Was Calm, the egg stock,
Okay.
and I had a big short. I had a big short on that, and yes, so I've definitely noticed that in staples, and like you mentioned, it is sort of the energy drinks and stuff like that are really the only exception to it. I don't have a real good reason other than maybe inflation cooling a bit, and then the forward looking thing in the other direction, anticipation that those prices might come down um, in the next 6 8 months, something like that.
Yeah, it's just interesting to me, and you got me looking at sectors in that regard now, and I just noticed trends, and um, going into the summer, just yeah, most of them are hurting. Um, is lemonade considered sugar water?
Eh,
Sorry, sorry, sorry. Oh, uh, we're about
I
to,
really wish I would have been paying attention to their earnings date. The site I use isn't always complete with that calendar, and I didn't even see them. But yeah, that was a huge move, and we're just now getting to the zone where I used to trade lemonade.
yep,
So
yeah,
definitely interested
yeah,
in that. It's kind of one of those where, I mean, yeah, you missed the big initial move, but now it's tradable according to a plan that you can actually use. Open was the same way. I mean,
yeah.
yeah, it would have been great to buy open at 80 cents, but we are where we are, and it's still got a lot of range up here. So that's where we are with that.
Shout out to Fubo.
Yeah.
You got anything else this side?
Well,
We got time. We got
I've
time.
been follow. I obviously follow copper and oil a lot. Copper had a big recovery Friday to get 1%. It's kind of back in that 375 area, and so 375 is kind of my line in the sand that if it can hold that, stay around there, that you can start to look at swings in copper, aluminum, steel, all that stuff. Breaks down to 350, you're going to want to wait a while. So I think it's going to require patience either way, but that's a big level to watch as we go into the week that most people don't bother to look at. And the other one, oil, which obviously people do follow, but I mean, coming into the summer is kind of make or break. I think we got to get back to thinking about $80. So that's kind of what I'm after for oil, to see a move back to 80.
I I like our sector focus this week. Seeing gold and silver on there um,
Yeah,
was was nice because I've been waiting for that. So one at a time, one at a time here, sir. I can't do
yeah,
gold and silver and oil at the same time. Um,
yeah,
I'm gonna stick with the gold and silver because those tickers are in worse or better shape depending on how you look at charts. Um,
yeah.
Real estate, what are you seeing there?
Just the perfect example of the forward-looking chart where I think some of the bad news coming out of real estate isn't affecting things because the stock's already absorbed all that. Really seeing some promising things in uh, commercial real estate, specifically medical, that I'll be getting into.
Oh, I don't know many of those tickers. We'll have to get on that.
And then,
I don't know many good tickers. Like I know some, but we get the AHTs or whatever of the world,
right, yeah,
and they're not good.
yeah.
Interesting, interesting. You got anything else, or you want to get to work?
No, yeah, let's do it.
No, perfect.
Oh, real quick,
Oh yeah, go.
I'll be tweeting out, posting. I wrote um,
Yeah, plug that.
a write up on MSTR for this called this Mile High newsletter. It's kind of a macro newsletter, and I'm going to be doing more of that. So I'm going to have something on lithium next week. I think so. So just kind of more long form stuff, taking advantage of my research background. So so you'll be seeing some of that. I think it'd be good for our channel. There's ways I can incorporate that into what we do, here as well. And so I have a lot of ideas for that. So you'll be seeing maybe one of those a week for me going forward.
Nice, nice. Yeah, I know that's right up your alley. As I always say, don't forget me when you're famous.
Yeah.
But yeah, good stuff. Good stuff. Can't wait to read it. I clicked the link this morning, think I was gonna be able to read it, and it was just it'll be out
The
later today.
promo.
So
Yeah. Yeah.
yeah, yeah. So definitely redrop the link when it goes live for everybody for sure.
Yeah.
Awesome, awesome. All right, let's get to work.